Oil futures plunging this week as China, the world's top oil importer, announced its economy grew at the slowest pace since early last year. But the ongoing conflict between Israel and Iran and its proxies is threatening to drive prices higher. Joining me now is Tom Kloza, Global Head of Energy Analysis at Opus. Tom, thanks for coming on the Barron's Roundtable.
Hi, nice to be here.
So let's start with the geopolitics. The death of Hamas leader Sinwar, the possibility of Israeli action against Iran. What do these developments in the Middle East mean for oil prices?
Well, if indeed Israel was going to attack the energy infrastructure, it might mean a lot because you have to worry about what Iran's response could be. But when news broke that they were not going to be targeting energy infrastructure, particularly Karg Island in Iran, the market really fell out of bed. And you can make the point that oil is probably reasonably valued or a little bit undervalued right now. And the bulls are basically hoping that, there could be some issues there that remove Iranian oil or some Persian Gulf oil. But right now, for the next 6 months, we're going to have plenty of supply and not that much of a demand growth.
So at the pump, the price is about $3.18 right now, and Opus is predicting that that price is going to continue to fall. Part of that is seasonal, of course, but there are other influences at play here, too. Can you explain those?
Yeah, last year gasoline was fetching prices of about $110 or $120 a barrel if you figured it out that way. And so buyers could pay up to $80 or $90 for crude. This year, gasoline is kind of an unwanted hydrocarbon, and diesel prices are weak and jet fuel prices are down considerably from last year. So if you look at it from the bottom up, from the refined product, there's not really a pull to pull crude oil prices higher. And December 1st is more OPEC oil coming on the market.
So you think we could go below $3 a pump? A gallon?
I think we definitely will go below $3 for the average price. We'll go below $3 on the weekend for the median price. The West Coast has got much higher numbers than east of the Rockies, but generally more than 50% of the folks out there can find gas for less than $3.
So on the oil company side, those companies have been exercising discipline that we didn't necessarily see during the fracking boom. And I've heard CEOs say they kind of like oil above $70 a barrel. Can they maintain that discipline and keep prices there?
Yeah, I think they will maintain that discipline because the folks that have lent them money don't really want them going out willy-nilly and, drill, baby, drill. The problem is we're going to have another few 100,000 barrels a day of Gulf of Mexico production coming on in the next couple of years. The billions of dollars have been sunk into that to bring that crude to market. And you've got OPEC Plus with 6 million barrels a day of additional capacity in their pockets right now.
So you said drill, baby, drill. That was actually part of Donald Trump's acceptance speech. So that would be the policy if he's elected. We're already the largest oil producer in the world, the largest natural gas producer in the world as well. How would that affect supply? Would it just keep on going higher, or you think companies would stay back and not actually drill?
I think we're close to probably the limit for our production. And, it's easy to say drill, baby, drill, but capitalism has sent many companies into the oil fields to find oil. These are much better than break-even numbers. I think a Trump presidency would be interesting because you might have a rapprochement with Saudi Arabia, and you could have one with Russia as well, but you might see tougher sanctions on Iran. But generally, I would look to whoever wins the election is going to have a great problem. They're going to be dealing with energy price deflation.
That certainly is good news. One more question, which is, what's the other side of that when you think about the oil stocks? Those companies, I guess, could be under pressure.
Yeah, I think they're going to do okay. Traditionally, oil prices weaken in the fall into the dead of winter. They drop about 30% or so. But they also go up from middle of December into April by about 30%. So I think it'll be very, very seasonal. We'll see prices overreact to the downside probably by the middle of December, and then they'll overreact to the upside by the middle of next spring. We've seen this movie before.
Okay, thanks a lot, Tom. See you soon.